The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you. You're listening to the Telltale's Weekend Update. I'm Ava Cabot.
And I'm Marcus Graham, the Cash Flow Desk.
Quick note, the show is produced entirely with AI tools, and both voices you're hearing are AI generated. Send feedback through the Substack. On Wednesday's main show, Hunt, Jason, and Mike spent an hour on one question. How do you get to a $2 trillion valuation on a company with almost no free cash flow? That was the SpaceX S1. This week, the market asked the opposite question and asked it 5 times. Not how you justify a valuation with no cash, but what the AI cash flow that actually exists is worth. And across 5 names, it came back with 5 completely different answers. That's the show. On page 2 of the memo this week, the whole enterprise software book tells one story and then contradicts itself. This is the cleanest version of the only fight that mattered all week. AI revenue is real, it's growing, and the market cannot agree what it's worth. Watch it price 3 layers of the same stack 3 completely different ways. Start with the data layer. Snowflake had the best trading day in its history this week, up 36% in a single session on a Q1 beat and a $6 billion 5-year commitment from AWS. Now the application layer. Salesforce beat the same week and told you Agentforce is already a $1.2 billion business, growing more than 200%, and the stock is down 33% on the year. Same enterprise AI dollar. One name up a third in a session, the other down a third on the year. Marcus, one of those prices is wrong.
The market is buying the picks and shovels and pricing the application like it's already roadkill. Going into this print, the memo had Salesforce at 12 times trailing free cash flow on an 8% free cash yield. Q4 10K confirmed. We re-anchor when the Q1 10Q files. 12 times on a company that's still growing and already running a real AI agent business. That's the price of a melting ice cube. Snowflake went into its own print at 45 times, and the market just paid up for more. The whole spread is one bet. Agents eat the workflow vendor and feed the data platform, and you're paying the fattest multiple for the side that might lose.
A melting ice cube growing 200%. Sure, and here's the tell the stock price is ignoring. Per Telnex's hiring data, Salesforce's AI and machine learning job postings jumped more than 5-fold in a single week. Companies that believe they're being disrupted don't staff the disruption. And then there's the third layer, over on page 5, with the chips and the defense names. Palantir is being priced as something you simply can't avoid buying. The stock jumped 9% this week, not on earnings, on procurement. The Pentagon made its Maven system a formal program of record, and the Army folded 75 separate contracts into a single $10 billion enterprise agreement. When the buyer standardizes on you, you stop being a vendor, you become infrastructure. Marcus, what does infrastructure cost?
It's the most expensive name in the entire memo, and it's expensive on purpose. 130 times trailing free cash flow. But a program of record isn't a contract, it's a multi-year funding line, and free cash flow already grew almost 200% over the last year. That multiple isn't pricing today's cash, it's pricing a decade of government AI spend compounding. The test is whether commercial growth holds up next to the government book. If it stalls, 130 times is a long way down.
So, rewarded, buried, and untouchable. 3 layers, 3 verdicts, 1 week. Here's the same fight, 1 layer down, in its purest form. Micron and Broadcom are the 2 ways to own the silicon underneath the entire AI build, the memory and the custom chips. Same supercycle. The market just priced them like they live in different decades. Micron crossed $1 trillion in market value this week for the first time ever, up 19% the day it happened, 88% in a month, because its entire 2026 high-bandwidth memory output is already sold out, and management says it can fill maybe half to 2/3 of what its biggest customers are asking for. Broadcom reports Wednesday, guiding AI chip revenue up 140% year over year to almost $11 billion in a single quarter. 2 anchors of the same build. Marcus, which one is mispriced?
The surprising one is Micron, because a memory company is not supposed to trade like this. Memory is the most violently cyclical business in technology. Boom, glut, collapse, repeat. And the memo has it at 102 times trailing free cash flow at a yield under 1%. On paper, that's absurd. Except free cash flow grew more than 5-fold off the last trough, And the bull thesis is that this time, the cycle doesn't come back, that AI memory demand outruns supply for years, not quarters. 102 times is the market betting the cycle is dead. If memory is still cyclical, this is the top. Broadcom is the opposite trade. Same supercycle, half the multiple. Going into Wednesday, the memo has it at 68 times trailing free cash flow on $32 billion of cash it's already banked. Not a memory company's hope, actual trailing cash. And Broadcom doesn't need the cycle to break. It designs the custom chips and the networking that wire 1 million accelerators into one machine, and it gets paid whether the buyer is Google, Meta, or Anthropic. Micron is a bet on a shortage. Broadcom is a bet on a standard. So here's what the comparison actually says. One supercycle, and the market trusts one of these names with twice the multiple of the other. Wednesday's print is the first real referee. If Broadcom's AI guide holds, the safer way to own this build is the custom silicon standard, and Micron's trillion-dollar tag is the one carrying all the cycle risk.
2 ways to own the same boom, priced like a coin flip. Wednesday, we find out which side the house is on. Away from the AI pricing fight, 2 catalysts moved real money this week, and a few names report before you're back here next Saturday. Eli Lilly had the kind of week that resets a franchise, twice. Phase 3 data on retatrutide, its triple hormone obesity drug, came in at 28% average weight loss over 80 weeks. That's bariatric surgery territory, from an injection. And separately, the one-time gene editing therapy it picked up in the Verve deal cut bad cholesterol by up to 62% with a single infusion. 2 franchises, 2 different decades of revenue, 1 week. Lilly presents the full data at the diabetes meeting in New Orleans, June 5th through 8th. And that's a clean segue, because Wednesday's main show is the healthcare deep dive Hunt, Jason, and Mike have been promising. Kratos jumped almost 14% in a day on a report the Trump administration may take direct financial stakes in U.S. drone manufacturers, the government as an equity investor in its own supply chain. Same week, Kratos and GE Aerospace won a joint Air Force contract to develop the engine for collaborative combat aircraft. It's the Palantir threat again. The Pentagon isn't just buying defense technology, it's trying to own the means of producing it. A few more before Monday. Meta started charging for the thing it always gave away. Paid Instagram, Facebook, and WhatsApp tiers went live this week at $3 to $4 a month. The company that built an empire on free is now testing whether its users will pay for it. In energy, Hunt made the oil call on Wednesday, so I'll leave the Strait of Hormuz to him. The company news this week was a handoff at the top of Occidental, where Vicky Holub steps down and Richard Jackson takes over June 1st. And the forward calendar, Broadcom and Five Below both report Wednesday. Five Below the cleaner tariff read, sourcing well over half its goods from China, with Oracle the Wednesday after. That's the weekend update. 5 names, 5 different prices on the same idea, that AI revenue is real and growing. Snowflake priced for acceleration, Salesforce priced for death, Palantir priced as a utility, Micron priced like the cycle is finally over, Broadcom priced like the only grown-up in the room. They cannot all be right. Wall Street's consensus on enterprise AI this week. Snowflake's the winner, Salesforce is roadkill. Same quarter, both beat, and one of those calls is wrong. Broadcom's print Wednesday is the first real referee. Hiring data this week from Talnexus, talnexus.com. Hiring data this week from talnexus.com. All of it runs off the cash flow memo, the universe we track every week. Grab it at telltales.us. Hunt, Jason, and Mike are back Wednesday on episode 2623, the healthcare deep dive they've been teasing for 2 weeks. We'll see you Saturday. The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, express or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.